Hello everybody and welcome to this week's ICE commentary on the dollar index and currency markets. You're speaking with Nick McDonald. Here, let's start with the dollar index on the weekly chart, and we identified it last week how we're stuck in a range between 74 and 7600. And notice I've got a number of lines on my chart. In fact, I'll delete this one up at 80 because it's a long way away. We'll assess that as and when price gets up there. But on the downside here, we've got 74, and the upside we've got 76. To see a really bullish confirmation, we need to see a break up through 77 really, which is this next blue line. And to see a really strong bearish confirmation, we're going to have to see a good break down through here around 73.30, probably even down below 73 to really confirm it to the downside. So we're very much stuck in the range between these levels, but the key ones are 74 and 76, and these are providing trading opportunities. As identified last week, if price comes down around these levels, it provides opportunities to be getting long and short within the range. Now, I had one trade this week doing exactly that. So as identified last week when we were back here, looking for price to come down to 74, came down to 74, candle started to turn bullish, got long on the break up through here, and if we just come and have a look at the candles, exactly what happened here. So this is where my entry was, stopping behind the most recent low, which is down below this low here, and just got a really nice 100-point run up to 75 before it pulled back a little bit further and then ran up again. So just had a really nice run there, just doing exactly as identified and just trading off these levels in the middle of this range. And in fact, let's keep that 2-hour chart up there. In the middle of the range, it's much more difficult to do anything else other than trade support and resistance levels because there's just no clear trend. So you can see here, even though this was my first, my only opportunity last week of 74, we had a number of other times here where prices come down and tested it. That's what makes it that key level. And then 7600, even though we haven't tested it as much in recent times here, certainly going back in time, and you can all see that on the weekly and monthly charts just how strong that level is. And 7600 being our big key level through here, where price has been tested many times in the past on both weekly and monthly charts. So we're in that range right now, and I'll be looking to continue to trade within that range. If we look at the weekly here, again, some of these old lines I've just identified, pointing out the highs and the lows. These arrows are just there to show that there is no clear trend. There's no clear winners between buyers and sellers. So the question is, what are we likely to do now? Well, until we break out of that range and have a good clean break in either direction, we're likely to stay within it. So there's a couple of areas there to look for trading opportunities. One other thing though is I'm just looking at any potential move to the downside. If we did break down through these lows and through 7400, I think this would be looking really bearish. However, if we broke up, I'd still be probably looking at this and thinking it's just likely to be a bit of a rally before a decline. I'm not seeing anything bullish at all about these charts. So in the longer term, I'm still looking at the US dollar and thinking this looks bearish. And if it breaks down especially, that'd be a really bearish indication of a move considerably lower. Let's have a look at why the market's so range bound and go and have a look at the biggest weighted in the dollar index being euro dollar. And you can see here, just look at this on a daily chart, it's just going nowhere. It's been going nowhere for a number of months now, and if we look at it just over these last few weeks here, it's very, very range bound, just like the US dollar index, and that's one of the reasons we're not doing anything. Then there you might think, well, hold on a second, dollar Swiss is just moving so strongly, why isn't this getting the dollar moving? We've had big moves down, big moves back up, but ultimately though as well, if you look at it, we've had a big move down at the start of the week, big move back up, and nothing much really happened, not really a huge amount of change. Go and compare that to dollar yen, and we have a look at a similar thing. We get a big move back up, really bullish dollar, big move back down, really bearish dollar, but ultimately haven't really moved that fast. There's been more movement on these. There just hasn't been a lot of activity. Come and have a look at a couple of other things that are interesting as well and might point to some more US dollar weakness. One is dollar CAD this week coming up and testing parity. So coming right up and testing, in fact you can see it more clearly on the weekly chart what's happened. Come up, tested parity and just rejected it. Parity obviously as well being a really big figure, and if we're looking for opportunities, this is another one of those levels where we can be looking for trades around that level, and came up, tested parity, fell straight off at a good 120 points below it as we speak right now. Have a look at Aussie dollar, and in fact I remember a day a long time ago, can't remember what day it was, but I remember looking at the charts and I had two little alerts going off at the same time as the dollar CAD and the Aussie dollar both tested parity on the same day from the downside. Now, literally on the same day last week, they both tested parity from the upside, and here Aussie dollar came down as well, tested this parity figure, and again, as you can see, bounced right off it. Once again, we can see it more clearly on the weekly chart, came right down, tested parity, and bounced right off it. Those are both signs there of a little bit of US dollar weakness. So coming back to the dollar index, Even though longer term my prediction there is looking more to the downside than the upside, I still would need to see it break out of that range first, so I'm only bearish if it breaks down through that. In the meantime, I'll be looking for more long opportunities around 74. I'll be looking for short opportunities around 76. If we do get out of those extremities, I'll be looking for even more short opportunities up around 77. And if we broke up out of that range, I'll start to think, start to consider any bullish moves to the upside. But ultimately, it's certainly looking more bearish in the longer term, and we'll just be watching this and continuing to look for these range-bound trades within there in the shorter term. Hope that helps everybody, and I will look forward to speaking to you next week and seeing if we've had any more movement out of this range or within this range. Undoubtedly, there'll have been some action, and we'll see how it looks on the charts next week.